The Bitcoin market is currently exhibiting patterns that suggest a significant accumulation phase following a recent downturn and subsequent stabilization around the 91,000 USDT level, establishing a narrow trading channel that demands close observation. Examination of the 4-hour chart reveals the formation of an inverse head and shoulders pattern, which is a classically bullish reversal signal, typically preceding a powerful upward movement. However, the neckline resistance, around 92,500 USDT, is yet to be definitively breached with convincing volume. The volume-weighted average price, or VWAP, remains above the current spot price, which suggests that the average market participant is still underwater from recent trades, adding pressure to sell into any rallies as traders seek to break even. Analyzing the order book depth on major exchanges, we see a dense cluster of sell orders accumulating just above the current price range, specifically between 92,800 USDT and 93,200 USDT, indicating significant overhead supply that will require a substantial influx of buying power to overcome. Conversely, the bid liquidity is relatively thin below the 90,000 USDT mark, suggesting that a swift drop below this psychological support could trigger a lack of buyer interest, resulting in an accelerated decline towards the next major support at 89,000 USDT. The stochastic RSI, a momentum oscillator, is currently positioned in the oversold territory for the first time in 10 days, which often foreshadows a short-term bounce as selling momentum exhausts itself. But this signal must be confirmed by a corresponding increase in buying volume to be considered reliable. Furthermore, the MVRVZ score, which compares Bitcoin's market capitalization to its realized capitalization, is lingering in a range that historically indicates good value for long-term holders, meaning the market as a whole is not overheating and long-term investors are not yet taking significant profits. This on-chain metric reinforces the idea of a structural accumulation rather than a distribution phase. The funding rates across perpetual swap markets have flipped marginally positive after a period of neutrality, which implies that leveraged traders are beginning to favor long positions again, a potential setup for a small shakeout or a temporary liquidation event if the price moves against them suddenly. We must also consider the recent movement of older Bitcoin supply dormant for over 6 months, which has started to move into exchange wallets, a key warning sign that long-term holders may be preparing to sell and take profits, an event that often precedes local talks. The institutional interest remains high, with inflows into major Bitcoin exchange-traded products or ETFs showing consistent growth, although the pace has slightly moderated in the last week, suggesting a cautious yet committed participation from regulated entities. My current projection is that Bitcoin will likely test the inverse head and shoulders neckline resistance at 92,500 USDT within the next 48 hours. A strong daily close above this level, confirmed by a high volume profile, would invalidate the prevailing bearish market structure and set a clear path toward the 94,500 USDT target. Failure to break this resistance, coupled with a volume decrease, could lead to a retest of the critical 90,500 USDT support zone, maintaining the overall sideways consolidation. The Bitcoin market is currently positioned at a critical juncture, exhibiting signs of both short-term bearish pressure and underlying structural strength, suggesting a high degree of market indecision and a forthcoming violent breakout from the established range. A recent analysis of the daily chart confirms that Bitcoin has marginally broken through the ceiling of a short-term falling trend channel, which typically indicates a slowing of the bearish momentum or a transition into a more horizontal trading pattern around the 92,068 USDT level. This technical break, however, is weakened by a lack of corresponding volume confirmation, meaning the move is not yet backed by significant conviction from market participants and could be easily reversed by a sudden sell-off. The immediate and most pressing resistance area is firmly established near the 92,500 USDT mark, a level that has historically served as a psychological barrier and an area where short-term sellers are actively defending their positions. Definitive and sustained break above 92,500 USDT would be a strong bullish signal, potentially targeting the next major resistance at 94,000 USDT, which aligns with the 20-day simple moving average, a key momentum indicator that currently acts as dynamic resistance. On the downside, the crucial support level is identified around 89,500 USDT, which represents the floor of the current consolidation zone and a significant area of short-term accumulation. A decisive break below 89,500 USDT would immediately invalidate the recent trend channel break and likely trigger a cascade of stop-loss orders, pushing the price down toward the 8,000 USDT level, which is the next major structural support. The relative strength index, or RSI, on the daily time frame is oscillating near the 45 mark, indicating that the market is neither oversold nor overbought, which provides ample room for both a rally and a decline without being immediately limited by extreme momentum conditions. This neutral RSI reading supports the view of a continued period of range-bound trading until a powerful catalyst emerges. Examining the on-chain data, the long-term holder supply metric, which tracks Bitcoin that has not moved for over 6 months, remains near all-time highs, suggesting that experienced investors are not selling their coins despite the recent volatility, reinforcing a long-term bullish bias and scarcity narrative. However, the short-term holder supply percentage is slightly increasing, which indicates that new market participants are buying into the recent price dips, and their conviction will be tested if the price drops further. The pull multiple, which assesses miner profitability, is currently at a healthy level, suggesting that miners are not under significant stress to sell their newly minted coins to cover operating costs, which is a positive sign for the structural supply side of the market. The volume balance indicator is marginally negative over the last 22 days, which confirms that selling pressure has been slightly dominant on average during this period of consolidation, a factor that contributes to the technical assessment of a slightly negative short-term outlook. We must closely monitor the open interest in the Bitcoin futures market, as a rapid